Welcome to another OANDA Market Snapshot. My name's Craig Erlam, Senior Market Analyst at OANDA. It's been another relatively turbulent day in the markets once again. The fears over Brexit continuing in the markets. We did see over the last week signs that they were subsiding slightly, but now we've had 2 days on the bounce where we've had some negativity in the markets. I do think all these headlines which we're seeing popping up relating to Brexit, whether it regards the housing market, whether it regards job losses or potential job losses or jobs that are no longer being created, or whether it's like what we're seeing today with property funds suggesting that the trading is going to be temporarily frozen on them due to the fact that they can't effectively sell their holdings quick enough. I do think all these negative headlines are starting to feed into investor sentiment on the whole, starting to get people a little bit concerned right now. We do of course have the leadership race now for the Tory party to find out who's going to be the next UK PM, at which point we'll find out what the next steps will be for the UK. Of course, whoever leads the Tory party is going to determine what the next steps are, whether we're going to push ahead and execute Article 50 this year, or whether we're going to hold off till next year. So this is, of course, quite a big deal, or even whether we'll see a new general election, which in my view seems unlikely at this time. Of course, in my view, only a few weeks ago it seemed unlikely that we were going to vote to leave, so you never know what's going to happen with politics and what's going to therefore going to have influence, have a big influence, I should say, in the markets. One of the big concerns today has been around Italy and Italian banks' non-performing loans. Suggestions that non-performing loans in Italian banks have got to extremely high levels. I think the number was around 17%, which is extremely high. 17% were described as sour, which again, very bad sign for the Italian banking system. We have had reports, of course, in recent weeks that Renzi, the Italian Prime Minister, would like to recapitalise some of the banks with public money, which is effectively forbidden by the EU as part of its moves to become to become a banking union. They believe that bondholders should effectively take the hit with regards to any difficulties that the banks are having. Of course, the Italian banking system has been extremely fragile for years, and it looks like this is going to come back to the forefront in the coming months as this dispute between Italy and the EU or the Eurozone pushes on. But like I say, that's become the latest concern today. We are seeing the Italian stock market taking a bit of a hit on the back of that, but I do think that's also dragging on most of Europe. The FTSE is the only gainer in Europe today, up just under 0.5%, and I do again think that's being supported by the weakness that we have seen in the pound as the session has progressed. So I think this is going to continue to be a common theme over the coming weeks. Now, if let's take a look at the economic calendar today, because like I say, it's been quite a busy session. We have seen we've had a lot of data out the Eurozone earlier on with services and manufacturing PMI, services PMI and composite PMI data out earlier on. While the numbers were slightly better, it's worth noting that a lot of the surveys were carried out prior to the Brexit vote, so I'd really take these numbers with a little bit of pinch of salt. They're only slightly better in the first place, but also they don't fully reflect what I imagine sentiment will be like currently in the Euro area. The services PMI from China overnight was a big improvement. It was just under 1 year high for the services sector, given the importance of the consumer now in China, given the fact that we are seeing that transition towards a consumer-driven economy, the consumer now responsible for more than 50% of GDP. This is, I think this is quite a big deal. I think this is at least encouraging, I should say, for the Chinese economy. The fact that we are near 1 year high. It could just be a one-off improvement. It'll be interesting to see how this progresses over the next few months. Australia remains in focus. Of course, we've still got the undecided election here. We had the data out overnight, which wasn't great, but we did have the RBA rate statement, and again, it was relatively mixed. They did touch on the fact that the growth remains decent in Australia, but then I guess the number of headwinds still facing the economy, being low inflation, the undecided election and the political uncertainty that brings, and of course the potential implications of Brexit here. So I think people are still maintaining that a rate cut could be on the cards at the next at the coming meetings, and a number of factors are going to determine exactly what happens here. We've also heard from Mark Carney today, who we got the financial stability report, and he discussed the Bank of England's latest response to the Brexit fallout, and the latest measures announced were a reduction in one of the capital buffers from within the UK banks, and this is effectively, it cuts the counter-cyclical capital buffer from 0.5% to 0%. This was something that was introduced after the financial crisis in order to deal with short-term in order to deal with downturns in the economy. It should free up around £150 billion to lend to the real economy, or at least that's the aim, assuming that A, the demand's there from businesses and households, and B, banks are actually interested in lending that out during these uncertain times. But this is at least the intention of the Bank of England with these latest measures. I'm sure they will not be the last. We had factory orders data from the US, which was slightly worse than expected, but really the focus has today been on both Brexit and the Italian banking system, and I'd expect that to continue as the days and weeks progress. Of course, as the week goes on, there will be some focus on the US. We've got the Fed minutes being released tomorrow evening, and we've also got the US jobs report on Friday, so another action-packed week to come for the financial markets. For more in-depth news and analysis, check out OANDA Market Pulse at marketpulse.com. You can also find out more about OANDA and sign up for a free demo account at oanda.com. Here you'll also get access to OANDA Forex Labs, which has a lot of great tools designed to help you with your trading.